Hello, my name's Simon Zutshi, and in this video, I want to share with you how you can make money in a property crash. Now, is the property market in the UK going to crash? Well, let's look at what's going on in the market right now. Having come out of the lockdown, actually the property market is experiencing a little bit of a boom. And I think that's because there are many transactions which for a couple of months were held up. You know, you couldn't do surveys, you couldn't get mortgages, solicitors weren't open, and so a lot of people wanted to buy but couldn't. So those transactions are all coming through now, and we're actually seeing a little bit of a boom. Also, estate agents saying they're really busy because people have not been able to do anything for a while, are wanting to get out and buy some more property. Now, you might look at that and think, well, the market's booming, fantastic, but don't be fooled by this. Now, my opinion, and it's only my opinion, is this. You know, unfortunately, we're going to see many people who are currently furloughed. In October, many of those people will be able to go back to work, but some of those people won't be taken back and they'll be made redundant. We're going to see more and more businesses, unfortunately, close. So what that means is a business closing, people may be made unemployed. This means the UK is going to go into recession and the UK property prices are going to come down. That's my view. If you disagree with that, you might as well stop watching this video right now. But if you think that's a possibility, property prices to come down, listen very carefully because I want to show you how you can make money when the market's coming down. Now think about this. When the market's coming down, think back to 2009. That's the last time you had a major property crash. I was investing then and I was helping many of my students guide their way through what's going on. Of course, it was different circumstances to what's happened right now. Now we've had a fall in GDP, we've had the effects of this pandemic, but back then it was a financial crisis. So it's different circumstances, but fundamentally the property market's coming down. One of the reasons that's happening is because, and I was predicting this last year, and I obviously didn't know about the pandemic, but last year I was saying I felt property prices would come down for this reason. And that reason is there were lots of landlords, long-term landlords who might have been investing 15, 20, 25 years. And they've got a lot of property, they're managing their properties, making a lot of income from that, and they probably own them in their own name. And that's important because prior to April 2017, owning property in your own name was the best way to hold it. Some people had it in companies, but most people had it in their own name for tax reasons. Now, if you own property in your own name, and if you're a higher rate taxpayer, which many property investors are, and if you have mortgages, which again, many property investors do, what happened was in April 2017, the government changed the way that we as property investors are taxed. They introduced something called Section 24. And what it actually means is that if you own property in your own name and you're a high rate taxpayer and you've got mortgages, you're going to pay a lot more tax on your property income. So much so that some landlords might have literally 50 or 60% of the profit in their pocket after tax that they would have had before this came in. So what this means is there are many landlords who've had properties for 15, 20, 25 years. And their exit strategy, their plan was to eventually sell their property portfolio and sit on a big pile of money. Sounds like a great idea to me. However, because they're paying all this extra tax, we're seeing landlords deciding to sell up early, to retire early. Now, it's not all landlords, obviously. Many landlords have moved their properties into a company structure or an LLP to minimize the tax they're paying. But some are saying, you know, I don't want the hassle, the expense of doing that. I might as well sell up early and get out of the market. This means there are many landlords, often with portfolios, coming to the market wanting to sell. So you've got all these properties coming to the market. Add to that the fact that right now, it's not very easy to get a mortgage. All the mortgage companies have put their rates up. They've sometimes lowered the loan to value. If you're a portfolio landlord, they want to look at your entire portfolio. They want to see what's the loan to value, what's the rent cover. And so if you've got a lot of properties and values have come down, it might be difficult to get mortgages. So on one hand, you've got lots of people who want to sell property. On the other hand, people who maybe want to buy maybe can't buy because they can't get mortgages. Thus, more supply than demand, prices are going to come down. So how can you profit? How can you make money in a time like this? Well, there are two things you can do. First of all, if you're just looking to buy properties, now is a great time to buy as long as you know what you're doing. Not a great time to sell, but a good time to buy because of this. If prices are coming down and people are worried about them coming down a long way, it's much easier to negotiate a good discount while prices are coming down rather than waiting till the market hits a bottom and everyone knows it's hit the bottom and everyone expects prices to come up, because owners will then be more optimistic and more hopeful that someone else is going to come along and pay more for their property than it's worth right now because the market's going up. So when it's coming down is an easier time to negotiate discounts than when it's going up. That's the first point. Now you might say to me, hang on a minute, Simon, if the market's coming down, it could go down further, maybe I should wait until it hits the bottom because I don't want to buy something here if 6 months later it's worth less money. Now that is a risk. However, if you follow the 5 golden rules that I talk about in my book, Property Magic, which is an Amazon bestseller, they are, first of all, work with motivated sellers. So we're looking for people who need to sell. Secondly, we only buy property in an area with a strong rental demand. Okay, so we're only buying something we know we can quickly and easily rent out. Rule number 3, and this is really important, whenever you buy a property, you must make positive cash flow. What that means is when you get the rent, you take off the mortgage, the insurance, the maintenance, the management costs, etc. You must make cash flow left over, which is your profit, okay? Number 4 is we hold for the long term, and number 5, we need a cash buffer. So if you look at rule 2, 3, and 4, as long as you're buying for the long term, it doesn't matter if you buy now or the next 6 months and the value's less in a year's time because you're not looking to sell it. You've not lost any money. The only reason you'd lose money is if you had to sold that property, bought it here, sell it here, you're going to make a loss. But if you're holding for the long term, you're giving the property long enough to recover. And in the meantime, golden rule number 2, you know you can rent it out. Golden rule number 3, you're going to make cash flow. Golden rule number 4, you're planning to hold for the long term anyway. Now, what's going to happen long term? Well, look, we live on an island. The fundamentals of the UK market are still the same. There is not enough accommodation and we have an increasing population. That's because of increased birth rates, longer life expectancy. And so what that means is over the long term, property prices and rents will go up. So if you're holding long term, it doesn't really matter if there's a short term dip. The property market is like any other market. It's cyclical. It comes up, it goes down, it comes up, it goes down. But the long-term trend is up because of the underlying macroeconomics of the United Kingdom. That's why so many people like to invest here. Whether they live here or invest from overseas, it's always got a very strong property market. So with that in mind, it doesn't matter if you're buying if prices are coming down, as long as you follow the golden rules, and actually you get a better price when it's coming down. So that's just, first of all, if you're buying. But there's something else I want to share with you. When there aren't that many buyers, sellers become more flexible. They're more open to creative ideas. And there are strategies that you can use, such as vendor finance, where the vendor actually puts the deposit in for you, so you don't even need to use your money. Now, it doesn't work all the time. It's got to be certain circumstances, and you've got to do it in the correct way. Most mortgage companies wouldn't allow that. You need to know how to do it properly. And the other strategy, which is one of my favorite strategies, which is becoming even more popular right now, is something called purchase lease options. In fact, let me correct myself. I said it's a strategy. It's actually more of an investing tool that can be used to acquire property and can be used with any strategy, no matter what you're doing. So if you're an advanced investor and you're doing property development, you can secure land and buildings with an option. If you're doing commercial property, you can use options. Even if you're doing residential property, buying property from landlords, you can do options. Now, an option means you control the property, but you don't actually own it. But you get cash flow and equity growth from a property you don't own. What that means is you don't need a big deposit and you don't even need a mortgage. Now, the big mistake people make when they learn about this strategy is they try and use it when it's not appropriate. It's got to be an appropriate time. It's got to meet the criteria of the seller. Ideally, they don't need the money right now. And actually, you can give the seller more money in the future than they would get if they sold the property right now. So again, when you understand these strategies, then you actually learn how to use them properly, and you can find people for whom they work and come up with an ethical win-win solution. So you get the seller what they need and you get what you need as well. So done in the correct way, they're a very powerful tool. Now I've actually got some extra training all about this. If you click on the link below this video, come and join me on a live webinar where I'll explain exactly when and when you can't use them, how to find them, and how you can start profiting using this incredible strategy of purchase lease options. But it is an incredible strategy, and it's perfect to use in the current market conditions. You can use it in a rising market as well. I've been using this strategy myself since 2007, and the way I learned about it was by mistake. I actually made a mistake on a property. My solicitor helped me, and I made money where I would have lost money by using this really powerful tool. So great strategy you can use. So in summary of this video, I believe we're going to see the property market come down. I don't think it's going to crash as much as it did in 2009, but I don't know, no one knows, but I really believe after this mini boom, we're going to see prices come down. What that actually means is, as long as you follow the golden rules that I talk about in Property Magic, you can buy a great property. As long as you're holding it long term, you can rent it out, get great cash flow, and allow for the price to come up. But you're going to get more discounts when the market's coming down than typically when a market's going up. That's if you're buying properties, or you can use creative strategies such as vendor finance, purchase these options, and actually use very little of your own money. If you want to learn about that, click on the link below and come and join me for some live online training. So my name's Simon Zutshi. If you like this video, want to subscribe to the channel. That means you're going to get access to all that. And click on the little bell as well, because it means you're going to get notified when new videos come up. There's a huge amount of content on my channel. Go and look for some of the other videos. I teach some of the basic strategies. What I also do is I interview some of my students who've done really well to get you inspired about what you can achieve. And we've got lots of case studies of our successful students as well. So go and binge watch this. You'll learn a huge amount from this channel. My name's Simon Zutshi as ever. I encourage you to invest with knowledge, invest with skill. Please give me a comment. Tell me what you think about the video. Thank you very much. Speak to you soon.